Okay, hello and welcome everyone to this ECB intraday strategy webinar. Today is October 22nd, Thursday. We do have Mario Draghi on the wires as we speak. I'll be giving you highlights from that conversation as it goes through, but we're seeing the euro really come off a little bit more abruptly. As Draghi sees ECB will re-examine degree of stimulus in December, sees downside risk to the growth and inflation outlook. You're seeing the euro really make it through those downside targets that we highlighted yesterday. Beyond here, you're looking at a basic trendline support. Sorry to jump right in, guys, but markets are on the move. You're looking for a basic trendline support from that September low, specifically the low that we made here in, what was that, late on the 22nd. That comes right around the 112 handle. More importantly, 111.80 into 111.70. This is actually the September open. And also the 764 retracement of the advance off the lows. So I wouldn't be chasing this down here. We will go over the setup in just a moment. As far as exposure that we have, we just got closed out of a Euro CAD short from yesterday. We'll go over that as well. As always, guys, there's going to be a lot going on today, so feel free to throw out any questions or trade setups that you're looking at. Some more comments from Draghi saying, says QE to continue until September of 2016 or beyond if needed. Very dovish comments here on the back of some concerns, increased concerns regarding the growth and inflation outlook. Says the ECB ready to use all instruments in line with the mandate. Council emphasizes willingness to act if needed. Policy accommodations must be re-examined in December. Degree of policy accommodations must be re-examined as well. ECB will fully implement monthly purchases, says QE can be adjusted in size, composition, and duration. QE provides sufficient flexibility for adjustments. All right. And sees downside risk to growth. So those are the headlines and the red sort of bold things that will be popping out throughout the course. I will keep you updated as those hit the wires. Again, I wouldn't go chasing the short side from these levels just yet if you're not already in. But just let's take a quick look back on where we are in the euro dollar. So here's what we look like in yesterday's intraday update. Here's what the daily looked like. And the trade was coming into this confluence region of support, namely 113.17. There's nothing fancy about it. It's just a simple and initial monthly opening range high that we put in on the 2nd of October. We tested it again later that week before finally breaking. That was acting as support, came in line perfectly with the lower median line parallel. So we kind of moseyed on through it during Asia and certainly into the open of Europe. We finally broke the lows from Asia, came right into that former opening range high for October. Dilly-dally till just now when we saw these comments slamming us down. 1275 was a soft target. 1241 is the 618 off of the decline. Off of the ascent rather, off that low. And again, next stop beyond here is going to be that 1174 region. The daily chart, 1174 is the October open, not the September open. But more importantly, you also have a 200-day, or this is, the 100-day moving average right in line there. 1174, 1174.5 is the monthly open. So that's the risk for the euro if we do see this downside persist. Now we're going to get the prepared statements over in a little bit, and we'll start the Q&A session. We'll get a little bit more color on it. But as it stands right now, certainly very dovish comments, concerns to risk, or risks rather, downside risks to growth and inflation, so both mandates, and seeing QE operations really duration lasting through September of 2016 or beyond. It's a pretty dovish approach, guys. We're talking about the Fed starting to hike interest rates. These guys have essentially just committed to almost a year of further easing from the ECB. So not going to be terribly constructive here for the euro. Look for that downside to materialize as long as you stay below 113.17. 113.17, again, that opening range high is what we'll reserve now as our near-term bearish invalidation level. As long as you stay below that high, we'll continue to look lower in the euro. Look for a rally here to sell. could be in play. Too soon to tell. We'll leave this here as a dashed sort of formation until we get a little bit more clarity on it. But right now, coincides with that 1240 level. Be very careful around that level. I feel like this thing could definitely make a head fake, excuse me, and just rip to the upside. So watch that region near term. Not a good day for the computer to be laggy. Okay, guys, feel free. Like I said, throw any questions. Yeah, there goes all bullishness for the euro dollar. I mean, again, these are things you can't fight, Mark, right? I mean, if they're going to be pre-committed to a year's worth of further quantitative easing, that's what the markets were looking for. They haven't given us a little, if you read the note yesterday, let me go back a minute here, Mark. If you read the note yesterday, I kind of alluded to that. We're looking for hints Central Bank will introduce further easing measures, but we're unlikely to get it. The ECB will want to wait for further guidance from the Fed as expectations for a December, early 2016 rate hike continue to circulate. And it's basically what the deal is. They're just buying time, right? They haven't increased asset purchases. They haven't made any changes yet, but certainly the willingness and the concern, the fact that they're continuing to highlight downside risks to growth and inflation really means that despite the data we've been getting, things have been a little bit shaky on their end as far as the projections they're seeing. Also note that they are saying that the QE measures are working. They're filtering through the economy. It's just not to the degree that they need. A quick note on the double whammy. We also had initial jobless claims from the United States coming out, a little bit better than expected on that front. Canadian, retail sales, another one I want to pay attention to, beats on both fronts. We were looking for a print of 0.1 month on month, came in at 0.5, also an upward revision to the previous month's print from 0.5 to 0.6. Strip out auto sales, pretty flat on retail sales, slight upward revision to the previous month. So not a bad data for the loonie. Here's what that looks like. Watch that euro. Likely to see a little bit of a rebound from this point. But a quick segue real quick into the dollar CAD. And you didn't see it make a dent here. So dollar CAD came up into the major key resistance that we talked about on the scenario where we broke the opening range high yesterday, which we did early in the U.S. session. We plowed right through the weekly opening range high there, through that 3070 level, and there's that major key resistance. 131.43 is the 50% retracement off the high. September open comes in at 131.38. It's exactly where we peaked out. For dollar CAD, what I wanted to say is tomorrow's inflation read is probably going to be the biggest mover. You didn't really see the BOC offer any guidance for price. Retail sales lackluster. You saw a little bit of a miss on the X-Core, but stronger than expected. Could see some downside, a pullback into the lower median line, back into 3070 region would be an area of interest. But tomorrow's inflation gauge will probably be the bigger player here for the CAD. Okay, we're expecting CPI to contract, negative 0.1 month on month. More importantly, the year-on-year figure is supposed to fall from 1.3% to 1.1. If we take the core, strip out food and auto, or food and fuel, you look at it at 2.3, slight upward revision on a month-on-month, year-on-year, also a slight uptick. So an interesting dynamic with that. If we miss on both figures, both the core and headline reads, you're likely to see CAD really take a tumble, and that could be a little bit more of a pop higher for dollar CAD. So we'll be watching that data print tomorrow, 8:30 Eastern. It's the last piece of data for the week that I'll be major focused on for the loonie crosses, which we've been following all week. So make sure we keep that in mind. Okay. Any questions? I guess we could just go back real quick. Any questions to the euro dollar setup before we move off? There's that 1241 level charging a nice bounce in price here. There was 1241 is our last target from last night. Here's what near-term price action looks like on euro dollar. Okay, so you can see that since the start of Tokyo trade, this thing has been really unable to clear 60 momentum, even on a 5-minute chart. Multiple breaks below 40, hold at 60, break below 40, hold at 60. The momentum has been bearish coming into this release. Now that we've seen some support here, I would look for, again, soft target resistance, maybe into 1275, ideally back towards that median line to jump into the short again if we want to try to press this lower. But I'd be mindful of that near-term support just off those September lows. And again, that comes in somewhere in the range of like the 12 handle, 1205. All right. Let me know if you have any questions on that. At the same time, quick note, guys, for the levels that we noted on yesterday's report, now that we've made a break of the weekly opening range low, we stretched into a new low, this retracement becomes null and void. I don't want to, really encourage this type of practice, but just for near-term price action, bring it to the most recent low that we made, see where the 236 comes out, and if we do that, I bet you it'll come pretty close to that 112.75 region. Let's see. Not close enough, but 112.89. So let's get rid of that soft target. And this would be sort of the region of resistance you'd look for on a rebound in euro dollar. Beyond that trend line break, if we make it 111.80, 81, like I said, into a 111.74. Monthly open, 764 retracement, right down there. Ooh, Mark, yeah, be careful with that. Happens. It's a noob mistake. I know it's you're way past that, my friend. He says, made a little accident there and left an order open to buy at 112.80. Watch it. Watch it. If we collapse much below 1240 into the open of US, I mean, it depends how much pain you want to take on that, but 111.80, 111.75 would be my next downside target beyond the 12 handle. All right, so I haven't taken any positions in euro per se. Most of the positions we've been in have been in the euro CAD, and that was featured also on last night's piece. So top side targets have been readjusted from yesterday's chart. If you need to take a freeze frame of this chart, guys, do feel free. For anyone who's new to the room, you can always click on that camera button in the top right-hand corner of your GoToWebinar screen, and it'll let you take a freeze frame rather, of any of the charts you see presented here. So that's euro dollar on the intraday. The other scalp from last night was euro CAD, and I actually was in this while I was writing this piece. Here was the setup that we talked about. I actually put this piece out on Daily FX as well yesterday. Really compelling where we're coming into. Ideally, we would have gotten a stretch into 149.56. 149.56, excuse me, completes an equal legs off the low. Right into that region, you have the upper median line parallel from the formation dating back to the September highs, and a basic trend line resistance off that August stretch high was right in that region as well. So ideally, we were looking for a stretch into that and a reversal lower, right? Here's what the EuroCAD looks like on the daily. You didn't quite get the stretch into 149.50, but there was a compelling short trigger both on near and long term, or both on the 5-minute and the 30-minute charts, right into that region of resistance. So it was worth a shot on the scalp on the short side. We cleared out of some of it this morning. Here's what it looks like, or here's what it looked like yesterday on the 30-minute. Again, the scale charts give you a little bit of a relative view, guys, of what's going on. So again, we were looking for that stretch into 49.25. We had a basic momentum trigger set up for the entirety of the day. We were waiting on a break. Here's what it looked like on the 30-minute. And here's what it looks like now. All right, so that momentum trigger did inevitably give out. That gave out actually ahead of the right into the open of Asia markets. We jumped into the scalp a little bit earlier off of this region. Could have actually had a decent profit on the first stretch down here. Had to wait it out before you saw that rebound back higher. And then the trigger came later last night, and this is where we actually entered the short. The confirmation on the 30-minute break, guys, gives us further validation. Okay, if this 30-minute had held and we had seen a break of the divergence signal we were putting into that high, it would have been a bailout signal to jump out of the trade. But once the 30-minute gives you conviction of the break, that's your sort of signal to hold. So here's, I guess on this one we could just go through the 5-minute. Here's what the 5-minute looks like for EuroCAD. Oh, some more comments coming out from Joggy saying driver of domestic recovery is lower oil prices. Says domestic recovery showing resilience and the recovery is continuing at the same pace as in the second quarter. ECB has examined prospects for firming up of the recovery. Says the stance has worked and assesses euro extend and assesses. Excuse me. Okay, so they're just saying that the stance that they've taken has worked and the policy change is filtering into the economy. Stance was not a wait and see approach. ECB has tasked committees to work in instruments, says the ECB open to whole menu of policy instruments. No particular choice of instrument was taken. External demand hurt by a slowdown in China. Here are the China comments now. It says external demand has shown weakness. Fiscal consolidation, another driver of domestic growth. It says inflation will stay low for a protracted period. These are all super dovish comments, guys, especially when they're talking about a protracted recovery in inflation. To pick up, inflation due to pick up, or to pick up, excuse me, due to base effect. Core inflation is basically stable, Draghi says. All right, we'll continue to bring you highlights on that. Really doing his piece to slam the euro here. Remember, guys, from the ECB standpoint, a weaker euro is in itself a form of easing. So it's no surprise here that these dovish comments having sort of the intended effect here for the ECB with the euro coming off. It says short-term inflation expectations have declined. Thing that's popping out at me is this protracted period comment on inflation. And Draghi says, see some downside risk to inflation. They keep crossing. All right, so I'll keep you updated. Sorry to go back and forth, guys, here, but I just want to keep you updated with these comments that are coming out. As we continue to see the euro on its route here, finally making a break of that weekly opening range we've been highlighting. But back to EuroCAD. Here's what EuroCAD looks like on the 5-minute. So the initial trigger came right here, was right here. You had some really strong divergence. As I always say, these divergence signals above 70 are typically your weakest plays, so you don't want to take too much emphasis on them. But, as I always say, 9 times out of 10, when you get a divergence signal into a trigger break, it'll be a decent play. So we missed this initial trigger. Again, this was right early in U.S. trade towards the close of London. You saw this thing come back up, fail again, and then the trigger break here is what put us into the trade. So a secondary trigger here, a 3-point, a little bit more conviction on us, gave us a nice short exposure. The stop was a real tight stop against the highs. I think the stop was only 20 pips at start. We're looking at 41 pips per scalp on this. This is EuroCAD. And the trade took quite a while. The stop was right against the highs. It took quite a while. This morning we had come right shy of the initial target, which was 148.13. So we booked a couple of pieces of that. Momentum on the rally came right into 60 and held. And then obviously ECB slamming this thing lower. Our limit was right down there, and it kind of just got booked on that last play. So at this point, I would be looking for a re-entry somewhere near 148 on a pop higher. You're not likely to get a pop that higher that you could really work with effectively today, but certainly a decent play here. And if we look at the daily charts, really nice. Look for basically a move right back into that median line. And that trigger break that we were warning about yesterday that we don't really trust, well, we'll test it today as support. And if we make it back below that, you're looking right back at 145.60, 145.90. That key support region. It's defined by the monthly low, the 618 extension off the highs, and a basic 38.2 off the lows. Question C here says, if the Fed takes Europe into account for their decision, then no raise there either. Euro at 112. Yeah, I don't really know if they're taking necessarily the European Central Bank into decision. I mean, look, Mark, they're definitely looking at everything, and this comment is kind of this discussion is kind of moot because the Fed's going to do what the Fed wants to do. But to answer your question, I think it was the exact opposite. As I noted in yesterday's piece, I think the ECB was sort of waiting to see if the Fed does anything. Remember, if anything, as far as expectations from CBs, the expectation for the Fed to move first is sort of ahead of everything, ahead of when we'll see more easing from the ECB or more cuts from the RBA. Any other bank that's supposed to move, it's really the Fed that's in central focus as the one that'll start to hike soonest. So as I said earlier, if the Fed starts to hike rates, that's an essentially easing for the ECB for free, right? Where they don't need to necessarily adjust policy. It should put more downward pressure on the euro, etc. If the Fed is looking at the ECB, deflationary problems here. We're having subdued inflation measures here in the United States. Subdued measures of inflation in Europe. We obviously have subdued measure of inflations here domestically. This global disinflationary environment, I think, is going to be what the Fed is really focused on, more so than whether or not the ECB moved today, is the concerns that you're seeing from every central bank noting China as a material slowdown in demand and concerns about lackluster inflation, weaker crude prices, or weaker energy prices in general continuing to exacerbate that. So it's going to be a very interesting read. By the way, the Fed comes on tap just a week from now. Will be the October print. Remember, for October, we've heard all the Fed officials multiple times saying October is a live meeting, which means that they leave the door open to move, right? Which typically you'd expect to see that you won't see too much changes to policy unless it's on a quarterly print where we get the quarterly projections, the press conference with Yellen, and et cetera. This is just going to be policy statement release, done and gone. But they continue to suggest that it's a live meeting, which means they do leave the door open to change. That being said, it's really unlikely they'll do anything this month, but that is next week. And for sure, Mark, it'll be something in focus. That's true, but if the U.S. dollar is going to be so expensive, forget about exports from the U.S. So the whole dollar strength hurting exports is a known problem. I don't think we've seen so much evidence of that necessarily, Mark. It's definitely starting to hurt corporate earnings. You've heard some of the earnings reports recently say that stronger dollars continue to exacerbate it, but if they hold or if they come out much more dovish with this next meeting next week, yeah, could see further dollar losses, and that would put the ECB in a corner because now they would really need to ramp up some of the easing measures here to be able to offset some of those. You're right, it is a long discussion, Mark. We can have a whole day just talking about the fundies, but what's the trade is the idea, right? That's what we always got to bring it back to. So, EuroCAD, a little bit disappointed I didn't leave anything left on that position because we are moving down into subsequent targets. So the 47 handles the next area of support. Look for that median line to offer some support. If it doesn't, we break lower. We're already, just see what the high is here. Okay, it's not an outside reversal day, but it looks like it's going to be a reversal day, obviously. Look for that trendline support followed by that key support down at 145.61. Any questions on EuroCAD from last night? I remember also the October low day close comes in at 45.65, which is a nice move with that subsequent swing low that we made on the 20th. That'll be your first soft target here on this move. One other thing to keep in mind, if you're looking for a re-entry on this, do not start chasing. Remember, as long as momentum remains in oversold territory, the propensity for the market to keep pushing is there. So we would need a little bit more of a recovery here before we can start jumping back in. Bring the 5-minute chart up, same thing here. All right, same thing here. All right, moving right along to some of the radar charts from last night. We highlighted both pieces in the Aussie and the sterling, which have been decent plays over the last couple of days. Here's what the US dollar looks like. I'll start with that. Here's what we looked like last night. And we were talking about this thing really butting up into this sort of consolidation region. You had a basic 38.2 retracement off of the highs. You got a median line parallel, upper median line parallel was sort of confluencing there, holding that high in place. And you had some divergence into that high with a pending resistance trigger. So on a break of that divergence and a move up beyond 11,950, initial targets would be 11,965, 11,979. You took out both of those already on this stretch. So expect some further possible topside here on a pullback for the dollar index. Next subsequent target, be looking for 12,009, which is just a basic 618 retracement of the decline. Also matches up with some nice pivots in price here as well. Key support for the dollar index, and the thing that would put us right back on the short side if we do break it below it would be right here. A basic trendline support off last week's low, and that 38.2, which capped the advance yesterday, right around 11,950. So you'd stay constructive above this region for a little bit more of a substantiated break to the upside in the dollar. If you look at the index, guys, we do have some room still. Before you start to get into any major resistance regions beyond this. Again, 12,000, the 618, as we just noted on that 30-minute chart, there's that 12,011 mark, which was the initial drop that you made for the week, for the opening range for the month. And that comes in just beyond, a little bit higher from where we are now. So there is a little bit more room for the upside stretch. Momentum could make another tag of that support structure, now turned resistance. But you'd look for a hold near term somewhere in this region for a pullback in the index. All right. Serious price action. It's going to be a little bit tricky here to try to time this right to get back in post this release. So use some patience, wait for the US opening range to pan out. We will get some back and forth, I guarantee it, which will offer us some possible re-entries on some of these moves we're watching. So that's the dollar index from yesterday. The other two that I wanted to focus as far as dollar crosses were concerned was the Aussie. Here's what Aussie dollar looks like on the daily chart. Coming into a key support region at this point. This is 71.77, 72.02. We talked about this earlier in the week. Basic 236 off the highs, not really the main focus, but that swing low from last week and a longer dated 618 retracement. This is from the advance off of the 2001 low? Yes, 2001 low. So long dated retracement. Also note that you have that longer dated trendline support dating back to 2001 just beyond that right here. Here's what the intraday chart looks like. A little bit cleaner, a little bit more operable. So, excuse me, here's what we looked like yesterday, and here's what we look like today. So early in the week, we had focused on this range, 72.40 into 73. You had a very clean weekly opening range. You came into a low, you tested the high, you tested the low, you failed at the high. That highlights the opening range you're looking for, that break. A momentum trigger break, we talked about this yesterday, shifted the focus to the downside. Ahead of the US close, we actually did come right into that support, and we held it again at the 72 handle. The rebound failed just ahead of 72.40, which was the opening range low, and you're looking for triggers up there. The trigger came late, so there was nothing for me here to do. You'd have to have been looking at a 5-minute trigger to get it there. The only problem is there wasn't anywhere really clear and concise to put the stop. That was my problem with the trade. So I didn't take it. Hindsight's always 20/20. At the end of the day, it was a beautiful opportunity to get back in a short right back towards 72. And in fact, that key support, 71.78, 71.80. The low in overnight trade was 71.80, fractional 9. So you were right there. So from this region, again, I'm not really interested in taking any short exposure from here. If we break lower, sure, we'd be looking for a drop into the lower median line parallel, and that gives us some room to play. I mean, below 71.70, you're looking at a soft target at 71.59 at basic 50%. But again, if we make it below that median line, you'd be looking for a drop towards 71.06, key 618 retracement, and then a 1618 extension off the high takes you down here. That's like 70.65. So the levels are clear as far as if we break this key region of support, where this thing should be targeting. As far as where we are now, you're getting some divergence all through those lows. So you could see a little bit of a recovery to the upside. You do have a little bit of a near-term trigger there. Also, the retracement that we were working with off the highs, we've made a new low. So again, we don't want to do this too often, but we want to kind of keep in mind what the topside target would be on a day with event risk like this. We're going to stretch that to the new low and lower our bearish invalidation level to 72.57. So break beyond here would shift us right back towards the long side of Aussie dollar. As long as we hold within the confines of this formation, we'll continue wanting to sell rallies near that upper median line parallel. Does that make sense? Any questions on the Aussie? Jazz, great to see you in the room, sir. Says, sorry, I have a basic question. What are the settings used for the RSI indicator at the bottom of the chart? So, Jazz, this is actually RSI 2. You can get it from fxcodebase.com. It's just an add-on indicator that allows you to put the 60/40 region right on your chart, and will auto-scale it for you. So that's called RSI 2. You guys can get that on fxcodebase.com. And I typically work with a 14 or 20 period. If the market's really expecting more volatility, sometimes I'll zoom it into to a 14 period. It really depends on what's giving me the clearest signals. I say this all the time. I'll literally toggle it back and forth and just see where the clearest signals have been, what has given me the best reversals off 60, off 40, and triggers. But it's usually either 14 or 20. Dad says euro dollar is at support, connecting low on 819 and 923. Let's take a look. Yeah, so we have that, right? We talked about that earlier. I think this is what you're talking about. I have it from 922. Oh, you're talking about 819. Yeah. It's almost the same slope. Actually, that's even cleaner. In any event, whether it's a trend line or whether it's the combination, we're looking at this region right here, 111.81, 111.74, right? We talked about this. Monthly open, 764 retracement. It's exactly what we've come into. Good eye though, Merdad. Yeah, that might be even cleaner. Let's get rid of this one. Let's just work with that one from the August lows. Not only that, again, sometimes it pays to leave these trend lines. Remember this slope line early in the week? We were talking about possible move to the upside with a break beyond this, testing the opening range high, which is exactly what happened. Resistance, break, instant support, and on the breakdown, area of interest yet again. My dad, does that help? Good eye. Looks good. Christopher says, good morning, Mike. What would put you long Aussie? You just said it. Thanks. Okay, yeah, no worries. So again, it would be a break above the invalidation level for me. Chris, I'm looking at like 72.60. If 72.60 gets taken out on the long side, I don't want any part of it. Because again, objectively, it's not that it's just a 38.2. Objectively, it's not just that it's the upper median line parallel, but the fact that it's both of those and would necessitate a break back above the initial opening range low. Yeah, all those factors happen. I don't want any part of the short side, right? And that's what you want to look for these invalidation levels is what condition, what levels, if broken, changes the picture. Well, if we're no longer in this downside sloping median line parallel formation, if we make it through the 38.2, we should be looking towards the 50. And if we make it back above the opening range low, which is what gave us the short signal to begin with, well then, what the heck am I going to try to sell it for? So I hope that helps, Chris, add a little bit of color of why our validation level is there. Chris says, can we take another look at intraday Aussie dollar? Sure, there is not a buy there. No, there could be a buy. I didn't say that, Chris. I'm just letting you know what the broader bearish invalidation level. From a scalp bias, sure, there might be an opportunity to get long here if we break the opening range highs for the US. You'd be looking right towards the former opening range low for the week, like 72.40 into here. But this is where I'd start to look on the short side again. This is what needs to break for me to be looking for targets beyond the confines of this. Guys, when we're scalping, the broader structure gives us the directional bias for the trade. But from a trading standpoint, we can play longs and shorts within that. When I say this is the bearish invalidation level, meaning I'm not going to be targeting anything beyond here on a long. And in fact, here's where we'd start to look for short exposure. I'd rather be selling rallies into here. Does that make sense? Which is why we don't post trade by trade on this, guys, because I can be, looking to close out my short here. One of you might be looking to put a long into this region. There's a lot of flexibility in how we can play this. So I guess EuroCAD is an example of that yesterday, right? If I just backtrack for a second, guys, oops. If we take a look at the EuroCAD trade from yesterday, this is an upward sloping position, right? My limit initially, what got taken out at that 50 plus region was right here. I'm not looking to target anything outside of the ascending channel. Now that we've broken, yeah, I've missed some more downside, but it doesn't matter. Now we have a clear directional shift, a change in behavior and momentum. Now we look to sell rallies. So I hope that adds a little bit of color. As far as the Aussie dollar, let's take a look at the 5-minute chart and see if there's anything going on there. So absolutely, you're getting some divergence even on the 5. Price action making a lower low. Remember, we're only looking at closes. So lower low, the oscillator making a higher low. I don't necessarily have a very strong trigger, although this looks like it could be something. The oscillator comes back, checks 40 support and holds. You might have a long trigger there against the lows, real tight. But you'd be looking only towards 72.40 on the top side stretch. I wouldn't even be looking that high. I'd be looking for the Asia highs, the European highs near 72.25. It's a real tight trade, but then again, so is the ATR, guys. They're only looking at about 21 pips as a quarter of the daily ATR. So it might be a nice rebound here. Chris, I like it. It's just for me, if I'm going to be trading one of these pairs on a day like today, I want something a little bit larger of a range. My focus is still sort of on the EuroCAD position. You're spent on data out of Aussie and the dollar essentially for the end of the week. CAD is on tap tomorrow with those CPI numbers. Chris is saying, I see. Bottom line, it should just sell the bounce. Thanks for the clarity. I mean, in ideal scenarios, the broader focus is to the downside, Chris. Yeah, you'd want to be selling bounces. The only thing is, like I said, this is a big support. So I understand the foresight to want to see the bounce off this low and play the long, but to get conviction that the bounce is more material, that we're seeing a near-term bottoming, this is the level that would need to give out. I'd be much more comfortable buying pullbacks above this break than trying to call a low. Remember, support is made to be broken, resistance is made to be broken, and just because there's support there, it's not in and of itself enough for us to take a long position, right? Because we could just plummet right through it. So especially ahead of the U.S. Open here, I'd hate to jump into a long position. U.S. opening range breaks clearly to the downside and just takes us right out. You only got a 21 pip allowance here, so not one of those pairs that will give us that flexibility with being able to push our stops a little bit more comfortably out during event risk, right? Hamid says, "Hi, Mike. I was wondering, is it possible to post some intraday trades you take on SB Squawk, like that Aussie you just talked about?" Hamid, I don't want to start doing that, I don't want to make a habit of it. You know, we talked about this earlier in the creation of SB. The issue that it starts to become is that it encourages a lot of chasing. Okay, sometimes I'm in and out of these positions quick. Sometimes I'm adjusting, adding to the position, taking off the position. With all the subscriber base that we have, it would be impossible for me to really disseminate that in a cohesive way without causing a lot of people to start chasing the moves. And again, there's so much flexibility in how you can play the levels, Hamid. Remember, I'm giving you the bias. I'm giving you the levels to trade off of. Whether you take a rebound here for 20 pips, which would have worked, this rebound for 20 pips, which would have worked, or whether you're looking for the short triggers on each move, which is what I prefer, there's a whole lot of flexibility. Secondly, Hamid, 80% of the trades I've been taking specifically over the last like 2.5 weeks, limits have been taking it out. So I'm not even going to be there to tell you when the position's getting taken out. So for the Euro CAD, on a trade like this, limit took out the first one. I literally came out of the shower. I found that we were kind of holding that low, and it showed a reversal candle here. So we took out another piece. It'd be very, very hard for me to actually do that throughout the course of the day. I'd be tweeting all day. Mario, my man, says, "Can you comment on Kiwi CAD?" Let's take a look. Oh, before we do, Mario, give me 1 second. If there are no other questions here on the Aussie, I do want to cover the last radar chart from yesterday, which was on the sterling. Jamie's really interested in this trade as well. Here's what the British pound looked like yesterday. So a little bit of a messy chart, but at all stance, it was just basically at support at 54.13, at basic 236, the Friday low from last week, and the median line off of the highs. Here's what we look like right now for the pound heading into the U.S. trade. We made a run right back into that 100-day moving average, 154.89. It's capped the advances, essentially the opening range high for the week. We made a run right back into that. It failed, and the turnaround right back again, checking that 236 support. This thing has never made a break of the weekly opening range. We've just been sitting in it. So if we break below the median line off the highs, I'd be looking for a drop back towards 53.38, which is the 915 swing low. Ah, 53.40, 53.38 right here. It was also the September open, not the monthly open, September open. And it will coincide very nicely with that upper median line parallel that we broke out of earlier this month. Looked like it was going to be a full-on pull break higher, failure of momentum. We couldn't clear that 100-day moving average on a daily basis for 6 consecutive days now. And you'd start to shift your focus with all these wicks up here back towards that key support region, a little bit lower. Already made an outside day candle here. Keep that in mind. So looking lower here in some of the pound crosses. All right, so that's the sterling. Let me know if you have any questions on that. Now let me jump into these Mario Kiwi CAD coming right up, my man. Here's what Kiwi CAD looks like on the daily. Oh, you're coming to that 200-day moving average again. So remember that 200-day moving average? I think we put a piece out on this last week, if I'm not mistaken. You had a nice outside day reversal right into that 200-day moving average, right? The pullback, we were looking for support into major key confluence right here at 87, and this is the break that you would need to get much more substantiated correction to the downside for Kiwi CAD. Here's the run. You're right back there again. I wouldn't do anything with this. It's coming into resistance. I'd be looking for short triggers right now from a near-term standpoint. Remember, this trend line, my friends, goes all the way back to 2011. Okay, support. It was the 2013 low. We bounced off it mid-year this year rather, before the break. It was instant resistance, and that level is exactly where the 200-day moving average is right now. So I'm not really a big moving average, guys. You know that. Moving average is not my major plays, but when you see pivots on a longer-term moving average like this, the market's looking at it. And specifically when these moving averages overlay or converge with trendline resistance, median lines, major Fibonacci levels, major highs or lows, that's when I tend to put a lot more emphasis on these moving averages. So Mario, I'd be looking for resistance right around here. I would need to see a break above 89.38, 89.25, this region, to sort of validate a much larger breakout. Again, this is the daily chart, right? So that would validate the bias. It wouldn't be necessarily a scalp entry. You wouldn't want to take a long at the high, right? But this is what I would need to suggest, a move back towards the upper median line parallel. And that takes you as high as 90, 90.30. On the intraday, here's what Kiwi CAD looks like. Let's take a look. Yeah, we did talk about this earlier in the week. So 88.60 gave out. Not only did it give out yesterday, but we actually came back and tested it as support, and it held all through Asia, Europe. So yeah, you're right at resistance, Mario. Tell me what you're trying to do with this thing. I'd be looking for some short triggers. I don't think that you have anything material in the 30-minute to start pressing the high. Remember, we don't want to be just calling the high. I want to see, he says that RSI 30 minutes starting to look a bit tired. It is, but if there was any trigger, I would have been looking at this one. Trigger break, tested as resistance, still could materialize here. But all these triggers are losing efficacy, which is, we could just sit right here for a while and then break higher. This is not necessarily a bearish trigger. It does look tired. Momentum is waning, but the divergence signal is very mild, right? The degree of how high the higher is, or how much higher the subsequent high is something you always want to measure when you're trying to ascertain divergence. So it could continue to go. I don't want to call a peak on it, but it is at a major resistance target. A trade like this, heading into the U.S. trade, if you get a spike higher, it might be worth a lob just to try to fade it. But let's see what it looks like on the 5. Kiwi CAD. This is a 1 minute. Okay, so this is how I'd play this one, Mario. Actually, it looks pretty interesting. He says I was looking for the short. Yeah, well, if there's any scalp you take from here, Mario, in my humble opinion, it would be on the short side, bro. I wouldn't ever want to advocate someone to buy at, fresh multi-month highs, even from a scalping standpoint. So here's what I'd be looking at, man. You have a pretty clean and tight opening range for US so far. The validation would actually be the European opening range because that's even a little bit cleaner. So you're looking at 89. And you're looking at 88.60. It's a little bit of a wider range that I'd want to work with when you're just looking at a 27 pip ATR. But if we get below 88.60, which was already highlighted here as a 786, I think it's 764, 786. If we get below that, that's the London opening range low, depending on what the U.S. session does. This is the U.S. session opening range low. That would give me a more conviction trigger. Also, keep in mind that all of Europe, through the entire session, this thing was holding 60-40, 60-40, 60-40, 60-40, right? That's a flat momentum signature. So, and if we break higher, it's tough to validate any type of stop on it, guys. Don't go chasing it. Don't go chasing it. Besides, 89.38, 89.20 is right up and coming as the next resistance target. Just my opinion, Mario. But that's sort of a multi-time frame analysis, what I'd be looking at here for the Kiwi CAD. Daily coming to resistance, checking the opening range high for the week, opening range high for the session. Pretty nice so far. Make sense? He says, thank you. You're more than welcome, Mario. Chris says, honestly, I didn't expect much strength in the dollar. I was leaning towards a short bias. To be effective, I have to stop leaning. Haha. I wanted that short dollar CAD at equal legs. And that's the thing, a lot of times, guys, well, I mean, I don't need to tell you the story, Chris. You know the deal. Especially when there's a level like that, we can't stay stubborn. If the market changes, we got to change too. Couple of the trades for the last couple of days, we were looking for that last stretch we never got. Euro CAD, we were looking for that last punch higher. Euro dollar even, I thought was going to get a little bit more juice. And if you read the piece yesterday, I was looking to fade a rally. We didn't even get a rally. This thing just broke down, right? So we got to be quick. We got to be quick and to adjust our buys and to adjust our trading to what the conditions are doing and what's happening in the marketplace. Yeah, I was expecting that you would get a stretch higher in the dollar that you could fade, but guess what? We railed through resistance. So I don't necessarily know if I want to fade this anymore. Am I going to just continue to try to press it because that's what I was expecting and we're at an even better place to put a short on? Maybe not. Maybe not. Mike, what is a quote-unquote safe indicator to enter a possible euro retrace up? Machi, I get really concerned, man, when people use that word. There's nothing in trading. There's nothing about trading that's safe, my friend. What I can tell you is what conditions I would look at that would make me start to think more on a retrace path or on a rebound path. A couple of things. He said that's why it's quoted with a little wink there. I get you, Match. I'm just playing with you, man. What I'd be looking at, man, to get to even start thinking recovery on this would be 30 break back above momentum on a 30-minute chart. I think at this point, see, so that's another failed attempt at the highs. You want to watch that. Where is it? I think even on the 5-minute, a recovery back above 30 would sort of be the onset of a near-term recovery. If you do get that, by the way, guys, the only region you'd want to be playing is basically the opening range high for the week into that low. So this is how I play these rebounds. So if the market stretches on a major news release, FOMC, NFPs, CPI print of some sort, you get a major stretch, market opens, and say you get that 30 break back above momentum, then I'll take a quick retracement off the highs, and I'll play these topside targets. Half leverage, maybe even a quarter leverage, because we're playing against the trend, right? So there's definitely opportunity there. But those are the conditions I'd be looking at. I never try to fade a position while it's in oversold territory because it can stay down there for the entire session, and you're just going to get smoked trying to call the low. So I need momentum to give me a concrete shift back from oversold conditions before I start to fade a move. And again, this is a 5-minute chart, so that could happen relatively quick. You won't be too far off the low. And the other part is it gives you a low to put your stop against, right? I'm not going to get into a trade putting a stop against the candle low that we're in. That's just, Now you're just trying to call a low, and it's disastrous, guys. I've seen more than one guy clean out their accounts trying to do stuff like that. Hamid says, would be nice looking at sterling yen. Sterling yen. Righto. So sterling yen with is it an outside day today? I don't think so. The high yesterday was 55. The high today 54. Not an outside day, but a reversal candle here off resistance. So the only thing I've been looking at with this is the 618 at 85.35. Looks like it wants to sneak over. Yesterday we were holding right at that 50 region as price was rebounding off this. I wanted to see a break back below 84.50. But instead, here's momentum mountain 50. Let's see what it looks like on the near term. Okay, so this sharper slope here is losing efficacy. I'm going to go ahead and get rid of that. Near-term support, see 84.50. It's the same level. Same level I was looking at yesterday, Hamid. That's sort of what I need to break to try to play a larger correction. You can play shorts if you get decent triggers into the weekly opening range high. I mean, we've held 4 times already. But to get a larger correction stance to the downside, kind of want to get below this region, which we haven't done yet. And even then, just take a sliding parallel off that to be safe. And if you do that, highlights the next target, which is 84.08. Whoop, shoot. If we do break 85.40, that's 618, and we close above it, specifically if we punch through it today after testing it 4 times, your initial target would be 86.08, 86.04. That's a longer dated 38.2 off the highs from August, I believe. Yes, from the August highs, and that's a 1618 confluence off the low. So a nice region of confluence there. Gives you basically just above the 106 handle if we break higher. A little bit of more of an expensive pair to trade, and it has a lot larger of an ATR. So you're looking at 36 pips as a quarter of the daily ATR. Not bad. I just don't think we have near-term conviction on it. And specifically since that break earlier above that region of support that we're looking for now, you know, the momentum barrier or the momentum signature has just been textbook 40-60. So again, a flat ranging market, which there is opportunity in. You can trade this range same exact way, guys. Bring up a 5-minute chart, sell at resistance, buy at support. Don't be targeting anything outside the range until we get those breaks. Either a break below support at 84.45, which that's when I'd start to get into trade. Just start fading out, grab some out, bring your stops down, or a breach back above, you know, the weekly opening range high to target 86. Hamid, does that help on sterling yen? Interesting pair at this point. I just kind of want to see us get out of this range, but broadly speaking, still working with this slope. He says, thanks, sir. Hey, my pleasure, man. Mario says, can you please show the Aussie Kiwi charts? I would like a quick snapshot of your level. Sure can, man. I was talking about this earlier with someone else on the Daily FX desk. Look, I'm looking lower, and the whole thing was that we talked about this early in the month, was this move yesterday, guys, not yesterday, last week, is what cleared the way for Aussie Key, in my humble opinion. We started the month talking about this major key support, a 109.10, into, what was it, 109.35. 109.35 being the low day close for July, 109.10 being a 236, a long dated 236 retracement. All the lows that we made for July, August, and September were on that support. So as we started the month, that was support region. Now, when this thing did this and it straddles it, that's when you take a step back and you can't do anything until you get a break of the monthly opening range. Okay, especially when it's such a critical level of support. Remember, on Aussie Key, we talked about this slope for months now. I know everyone here who's been in the room, we've recognizes this. This is the slope off the 2014 lows. It's defined every high, low, and pivot in price for the last 2 years. That same slope. Okay? So that broke early in the month. We sat at this support, we straddled it, but look what every resistance ran into. Same slope. Next rally, same slope. We finally broke the opening range low for the month here on the 14th, and that put the downside bias really in play. Now on this move here, taking us below the 200-day moving average, again, we dilly-dallied around this 107.11, 107.23, which was the major target, and the next slope support. We dilly-dallied here. Yesterday's rally, or attempted rally through the 200-day, through the median line, and failure on a doji is as bearish as it gets. Here's the breakdown. I have a soft target right here at 106.17, but your next move down is 105.57, and that's a basic 618 retracement off the yearly range. It's been a stalled trade, Mario. You know what I mean? And the reason I couldn't really highlight it for a featured scalp is because the ATR was like 88, was 98 pips just a couple days ago. We're getting it starting to stretch a little bit more now, but it's way too tight for my liking. So the rebound off the median line shifts the focus, keeps us lower. Momentum, remember we talked about this, the biggest shift and deepest pull momentum that you've seen. First break into sub 40 territory from overbought since here. Slight overbought, but there was the break sub 40, and that was the onset of a much steeper move lower. So look for 106.17, look for 105.58. Near-term targets on the downside. Inevitably, a measured move just for if this is some sort of double top formation or triple top formation, you'd be looking for a move back into like 104.40. But the 2618 extension takes us down as 102 or 103 rather, the 103 handle. So you got clear downside targets. The immediate bearish invalidation would be with a break back above this region, confluence of that 200-day moving average in the median line. That's what I would take to invalidate the downside for Aussie Key. Sorry guys, my computer's a little laggy here. There we go. All right, so Mario, that's the Aussie Kiwi on the daily. Again, the main thing I'm looking at are these slope lines. They've been a great help for the last 2 years, so there's no reason, if it ain't broke, don't fix it. That's Aussie Kiwi on the daily. Here's what it looks like on the 30-minute. Let's take a quick look. We are over on time. Guys, if you have any last-minute questions, feel free to throw them out. All right, so you're testing some near-term support. You could get a little bit of a rebound here, but same invalidation level that we just talked about. I wouldn't change that. Here's last week's low. We're basically just testing that right now. Okay, and there's the 30-minute for you, Mario, if you want to take a snapshot of that as well. Thanks, I got them. All right. Quickly, dollar CAD. I think we talked about dollar CAD, or did we not, guys? Here's dollar CAD real quick before we leave. I don't want to leave it off the table because we do have CPI print on tap tomorrow. So look, 103.70, I think we talked about it, gave out as resistance. Use some caution. You could get a pull back into that region again, but it leaves the focus now, or the risk, for a topside pop back towards 32.17, this region here. So a trade that we've been following obviously all week since the BOC. This is your next topside objective if we do break resistance. The momentum signature looks constructive. I wouldn't be too surprised to see this thing break down into 40 and hold there, support and possible long entries right back at that resistance that we were looking for yesterday. Here it is, 103.70 region. Inevitably, okay, we'll be still looking to possibly play the short side. But at this point that we've made that break, puts a lot of risk for tomorrow's release. If we do get a 132.17 spike on the CPI figures from Canada, it would be a very interesting area for me, at least, to start looking back on the short side exposure. Let me just snap these lines for you. There we go. Give you some perspective here. So this is the median line formation off the high that we're looking at the daily chart. And this is what we would need to essentially break back below to confirm the turn in price that we've been seeing. That being said, you're at resistance, a breach higher, 32.17. This is the broader bearish invalidation level. Okay. And this is actually the reversal day close at 132.88. But long story short, bottom line, you're constructive well within this formation, which is 30.70. Topside objectives if we break higher, 32.18, and the high day close at, or the reversal day close at 32.88. So quick look there on dollar CAD for you, Chris. That was your question earlier today. All right, so that gets us through the webinars for this week, guys. I want to thank you all for your participation. Look, you do have some stuff on tap for the remainder of the week. Watch those CAD crosses heading into tomorrow's CPI print. Look for the euro to get a little bit of a hangover on whatever the move is as we head into the U.S. Open. Obviously, U.S. markets just kicked off a couple of minutes ago. There's Kiwi CAD, but let me take a look back at that euro dollar. Yeah, continuing its course lower. So I wouldn't be looking to necessarily jump into any fresh shorts at this point, guys. It's pretty stretched. Look for a little bit of a hangover effect, but we'd be looking for that rally to max out near 112.40, somewhere in that region. The median line, if this is in play, would be the area of which we'd start to look for fresh entries from a scalping perspective. Best of luck trading. Have a great weekend, and I will see you guys next week. Cheers.